So the Federal Reserve concluded their July meeting on Wednesday of this week to determine what they were going to do with interest rates. What was the outcome of that meeting? Drum roll, please. They did not cut. They left rates unchanged. Now, was this a surprise? No. Most economists, most investors expected the Fed not to do anything with interest rates. But as always, they want to pay attention to what the Fed says after that meeting. Are they going to allude to future rate cuts? And this was big because there is no meeting in the month of August, so the Fed doesn't get together now again until September. Jerome Powell's comments after this Fed meeting was pretty much the same as always. He talked about the potential impact on inflation when it comes to tariffs. Although I will tell you, so far, tariffs haven't really shown any significant impact when it comes to inflation, but Jerome Powell still wants to hold steady and see how this plays out. It is a little bit questionable with Powell when it comes to cutting interest rates and the impact on inflation, because if you go back to September of last year, the Fed was aggressive then and they cut 0.5%, but yet inflation was at 3.3, so not near their target of 2%, so 3.3%, and the job market was stronger than it is today. Now you fast forward to this meeting on Wednesday, and you have inflation down to 2.7 and a weaker job market, but yet he still doesn't want to cut. Even though they elected not to cut interest rates yesterday, something very significant happened. For the first time in 33 years, we had two board of governors dissent as far as interest rates remaining the same. So that means we had two board of governors, it was Bauman and Waller, that basically wanted a 0.25% cut. Now, this is significant because usually the Fed committee, and I'm going to backtrack a second because I talked about this 2 weeks ago when I was highlighting this potential shadow Fed president. But there are 7 board of governors, and then there are 5 regional presidents. These 12 members have a vote. They have a vote to determine monetary policy. This is called the Federal Open Market Committee. So to have 2 board of governors dissent, which hasn't happened in 33 years, is significant. This is sending a clear signal that not everyone is on board with Jerome Powell. And I had mentioned that there was some rumbling a couple weeks ago within the Federal Reserve Board of Governors, and now you're seeing it play out through this vote. So I think this is very interesting. I think this even puts more pressure on Powell. And if we get some weaker job numbers, if unemployment claims continue to go up, if we see the labor market really start to slow and inflation does come down, then this is going to put more pressure on Jerome Powell. It's going to be very interesting to see what plays out in the month of August, but I'm still a believer that they're going to cut in the month of September. I just think there's going to be too much data out there that Powell can't ignore. The chances of them cutting has been reduced with investors, but it'll be very interesting to see what plays out. Make sure you stay tuned. We'll have all the latest updates as they become available. Make it a great day.